and welcome to my Vida. If you are watching this video, most likely you have visited my website or you have purchased my fin plan kit or you are planning to purchase one. First of all, thank you. I really appreciate your support. I believe a financial plan is need for everyone and it should not be limited to only rich people who can afford it. This particular kit allows anyone to create financial plan covering basic things like term insurance, goal-based planning, and retirement planning. So I'll walk you through the whole process. And of the process, the first and foremost file is a MyFinPi profile. This is the file which captures everything about you, which is required for making a financial plan. So we'll go through this one by one. As you can see, this file has many tabs. Disclaimer, my family, goals, liabilities, income, outflow, insurances, assets, calculators, and summary. You need to go from left to right and fill up each one. First and foremost is disclaimer. I recommend you to reach each and every line over here so that you understand what it means and what specific assumptions are made over here. The most important part for filling up this document is, in general, you have to fill up only white background cells. I've used three colors: blue for heading, white for somewhere where you can fill up, and gray color for mostly formulas or data is picked up from other parts. So let's begin. The first and foremost is my family. So what I have done is I've assumed a fictitious family called Rahul, Pooja, and Priya. I've taken good names from movies. So I've just taken a fictitious family and nothing should match. As you can see, the first is MyFin profile date. It is currently, calculated as today. I request you to hard code as per the date you are starting it. Over here, you fill up names of all your family members who depend on your income. And over here, you put the date of birth. You can also put the right relationship and occupations for each one of them. PAN number, mobile, and email ID are optional, but I recommend you to fill it up. Please note that the most important part here is these are the family members who depend on your income. It's not about capturing each and every brothers, cousins, and all. It is purely a family who depends on you. Once you have filled up this, you can move to another section called goals. This is the kind of destination or the final place where you want to reach. I've categorized goals in three things. One is emergency funds. Usually you need it for any emergencies or situations which is beyond your control. Over here, you just fill up year and we'll calculate the date, or you can put date directly. Please note that all the dates are MMDD YYY format. On your computer, it could be different, but when you fill it up, it should show like the way it is showing. And you can also fill up the desired months of safety. We generally recommend 6, but off late for many clients, I recommend 12 months given the job uncertainty in IT sector. Once you have done for emergency fund, the next section is financial freedom or retirement. Over here, these values are taken from the first member of the family. So you can just say the current age and that is taken. Date of birth also is taken. What you need to fill up is the retirement age and life expectancy. And all these values are calculated based on it. We generally recommend life expectancy of 90, but Rahul has taken 85 based on his circumstances. Likewise, retirement is generally as per your wish. We want to see when you are financially free, although you may continue to work. Once you have filled up goal, you can go to another goal called life goals. These are like a life event. Like in Rahul's case, it's like Priya's graduation, masters, and marriage. These are the three important things he wishes he would complete, before he retires. And as you can see, he has put the current value of it. Now, this is the most important part. For any goal, you have to put the current value as on today. We'll apply inflation when we are planning the goals. So you don't have to worry what will be the value in the future. However, you put the target date, which is when you want to accumulate this money. Means when this money should be ready to fulfill the goal. So for in case of Priya's graduation, he thinks that Priya will be 18 in 2036, and that's when her graduation will begin. So at that point in time, Rahul will need 35 lakhs of today's value. We'll inflate it at later when, and that will be covered in the next video. Okay. Important notes, you can change the heading of the goals as per your liking, and that's recommended. If you fill up here, it automatically calculates date as 31st December, or if you just put the right date also, it just works. You can do either way, it's fine. Once goal section is completed, we move on to liabilities. In these sections, we cover all the loans Rahul has. Okay, in your case, you just put whatever loans you have. So general thing you require is what is the current principal outstanding, not the total loan you have taken, but current outstanding. You also put the EMI which you are paying. You put the start date and the loan tenure. So automatically it calculates when the loan will close. And you also put the interest rate. Now you can clearly see Rahul has two loans, and the car loan is paying much higher interest than the home loan. Okay. Another important thing is target closure date, right? So if Rahul wants to finish the loans earlier, he can put this target the closure date so that that can help us to calculate how the loans can be closed earlier. Okay. I think the most sections are straightforward. Just to on credit card, if you are just taking credit and paying every month, then should be zero. But if you have some amount left and you are paying an EMI, then this should be filled it up. Okay. Once this section is complete, move on to income section. So over here, you cover your family's income, mostly yours, your spouse, any rental, pension, business income, dividends, or any other income you have. You have extra rows in most of the places which you can utilize. You can also change the heading if you feel those headings are not relevant to you and put the numbers. What is more important is to identify what are the income sources, what is the monthly income which you actually get it in your bank account. And in if you are working and if you are likely to get annual bonus, then you can put it over here. So as you can see, Rahul's case, he has monthly take home of 217 thousand. His wife also runs small business, so he has only captured profit here. So we'll see it in the next section again. And he has a house in his hometown where he is getting 5,000 rupees of rent. Uh, Note here, this salary is not a gross income. It is the take-home salary after all deductions, because that's the money he gets into account. We'll also capture the savings which is getting deducted later. So I'll show you that. But for now, it is only take-home salary. You can also capture some of the projected income. In some cases, you know that you are buying a house and after 1 year or 2 years, it will be ready and you are going to get a rental income. You can capture it. You can also capture pension. Many times, someone has bought a money boy policy or pension scheme where you are likely to get pension in the future date. So you can capture those here. Apart from that, if you are doing any monthly investment, you can capture. And what you think is you still have money left for savings, you capture over here. But the idea is to, at this point, the idea is to see how much you think you are able to save. Okay, so that money should be captured here. Once income section is filled up, this is the most important section called outflow. You can also call budget. It's little complicated and big one, may take time, but it's very important. Okay, so I've divided outflow section into monthly rent, monthly bills, yearly bills, monthly caregivings, lifestyle, business, life insurance, general insurance, and EMIs, so to cover all kinds of costs. So let's get into each one by one. Monthly rent is straightforward. You have to put whatever rent you are paying, or if you are owning a house, just put zero. Monthly bills also straightforward. There are various categories already given. You can just use it and put the numbers over there. And if some categories are missing, feel free to update anything, or you can just add extra rows and put the numbers over here. These are the expenses you pay month on month. You have no choice. So be aware of it. Okay. Uh, the next one is yearly bills, right? So this you don't pay every month, but once in a year you end up paying maybe health checkups or dentals or property tax or festival expense like Diwali, Holi, or so, professional membership, the subscription, vehicle maintenance, or regular gifts. Okay, so all those things you capture, and as you can see, you put the numbers as a yearly numbers, and it automatically calculates the monthly numbers. Apart from that, if you are doing any caregiving, right, you are giving money to your parents-in-law, brothers, sisters for taking care of them. That money goes over here. If you are also doing some donation, you can put it over here, or there's also another placeholder where you can put it. Besides that, there's a education expense for kids, so that is put it as a yearly one. In Bangalore, we mostly pay yearly, so that's why I've kept it here. But yeah, you can just capture what is the yearly amount, and it automatically calculates. It is for your kids, yourself, and even for your spouse. So that goes over here. After that, there's a lifestyle expenses. Now, this expense is kind of discretionary. In case you want, you can avoid it and leave out without that. So that's why I call it lifestyle expenses. Over here, the major items are electronics like mobile, furniture, freeze, and all, which you have to upgrade once in a year, maybe. So that's an average one, which you put it over here. And nowadays, most people would like to live today and at least have 1 or 2 vacations. So put that expense over here. And then there are people who think that they should donate. So if you are donating also, you can put it over here. Okay. If you are owning a business, you can also put business expenses in a very high level categories. I think that covers for most of that. I've used for my own planning, so I know it. In case of Rahul, although Pooja does business, he has not put any expense over here because he has kept only profit over there. Other way to do is he can put the revenue over there in incoming and expense over here, which will work out the same thing. But Rahul has kept it simple. Besides that, there are other things like life insurance, general insurance, EMIs, and all. So don't touch anything. As you can see, EMIs is already picked up from the liabilities sections. The same way, life insurance and general insurance section, once we fill it up, this data will come over here. So let's quickly jump into insurance and come back here. The insurance section, as you see, it has mainly life insurance, health insurance, and home insurance, and also vehicle insurance. There are four things. The life insurance is divided into four categories. Okay, the first one is term insurance, where you don't get any money if you survive. Many times your company will also give you group insurance, so that will go with here. So in case of Rahul, you can see the company has group insurance of 75 lakhs while he has bought 1 crore term insurance. Other insurance which I recommend people never buy it are endowment, money back, and maybe ULIP. Okay. ULIP is questionable, but at least endowment and money back policy, one should never buy. So in case of Rahul, he has done a good job. He has not bought it. But if you have it, you can put it over here. The most important information in all the insurance is annual premium amount and sum insured. So you just put it over here. However, I recommend that you fill up each and every information. This Excel sheet is for you and your family. So if something untoward happen to you, they can locate this all the data and they can actually claim the data. That's why this information is very useful. Below all the things, you have also health insurance. So in case of Rahul, he has only a family floater given by company, as you can see, and he has not purchased any other insurance. He also has a car and a two-wheeler, so he has put the amount for that, and he doesn't have any home insurance. Right. So overall, if you see this Excel sheet, this particular sheet has lots of data point, and I request you to fill up because it will be pretty useful to you. For the purpose of planning, what we need is a premium amount and sum assured. Okay. Once this is done, we move on to financial assets. Uh, as you can see, this is categorized in many things. and it covers even your deductions like an EPF, NPS, and superannuation, and also employee stock purchase plan. Okay. I've given four names with various columns, and you can choose those names. I've just taken from first four in the family information, but you can change the name. It's changeable. Over here, you have to put the current value of each of the assets. Okay. And in these four cases, if you are there is any deduction which going out of your pay slip, you have to capture here. So if you see in Rahul case, he is contributing 28,000 towards EPF and 4,000 for NPS, while zero for superannuation and the ESPP. This particular Excel sheet takes a lot of time because you have to go to each and every account and see what is the current value. If you have done automation, some values can come easily, but still it requires some amount of initial effort. And I see many people unfortunately give up, but this is the most important one. Okay, as you can see, Rahul has total 92 lakhs of assets and he's saving 32,000 rupees uh, towards some of the employee related schemes. Apart from that, if you see some assets which may come in future, right? Mostly it is endowment maturity amount which may come, which you can capture over here. Or in case of unvested stocks, which may not be guaranteed, but you can capture here. So you know that you are likely to get it. So, and you have, uh, you know, you are foreseeing what may come to you, which can be available for your goals. Okay. Once you filled up all financial assets, you go to other assets. Other assets are nothing but properties, commodities, and movable assets like car and two-wheelers. Car and two-wheelers are not necessarily an asset, it's a liability at a bigger picture from a different definition point of view, but it still has a value, so you just put it over here. Commodities also, most Indian families will have gold and silver jewelry, so that's what I have captured here. If you have gold ETF or something, it should go to financial assets. Okay. And properties, as you can see, the primary home is the main one, and then you may have multiple properties. So just put the approximate current value of each one. You may have other assets like arts and all. You can probably put it under commodity section. I've not seen any customer having this, so that's why I've tried to keep it simple. Apart from that, you also have a placeholder for calculators, which is mainly for gratuity and leave. So some people don't know how to do it. So they can put the right number and do it. However, I still suggest that you look at your pay slip or appointment letter and apply the necessary rule to calculate what is the current value of your gratuity and leave in case you have leave balance available. Again, leave encasement, mostly I like to keep it zero, but I also know many people have 40, 50 leaves and they'll never consume it. That's why I consider that as an asset, which mostly you get it when you retire or resign. Okay. If you have completed all the previous sections, let's move on to the summary section. This is a section where all your data come together, and you will see that most of the top part is a copy paste of the previous data. Budget and outflow. So over here, I forgot to explain it, but I'll do it right now. Yeah. So in the outflow section, when you go, you will see expenses categorized, which is like monthly outflow, which is 184, right? But Rahul is paying around 62,000 of EMI. So if I remove EMI, his outflow is 121. Okay. And we do not calculate that for life insurance because in when we calculate sum assured for life insurance, we try to close the loans. So EMI need not be considered when we are looking at what is required for him to leave behind for his family. So that's why this is the number used for life insurance. And for retirement, he would not require for things like children's education fund because by that time, children education should have been completed, or even some of the caregiving which he is doing. Again, you can review it and see yes, no, and mark correctly so that you get this number correct. Okay. The same thing shows up here in the summary section, and it's just a copy paste. If you want to change anything, please change in outflow section and not in the summary section. Okay. The most important data point over here are the four tables. Okay. Out of that, the two are the most important. The first is cash flow, and the second one is financial assets for goals and financial freedom. So let's understand a little bit more. The cash flow in general means that what are you able to save out of your income after spending? Right. So if you see monthly cash plus six is the total money you can save just based on the number you have provided. While in case of Rahul, he thinks he is able to save 50,000. So more or less what he's thinking is seems to be correct. It's very close to the actual cash flow he thinks. Besides that, he has 62,000 of EMIs, which is again a cash flow because he's using that EMI to build assets. He's also savings around 32K into EPF and NPS. And he has annual bonus which is left out, which he is not using. So if he gets it, he can use that money for any expense as well as for any goals he has. In the same way, you have assets which can be utilized to fulfill goals. In general, the assets can be liquidated or it can be assigned for specific goals. So if you see here over here, the assets are at a broad level, six categories if you don't capture the future part. And these are the assets available for you to liquidate or assign. I've considered retirement as one kind of asset instead of putting in equity or fixed income over here because they are not available to you until you retire if you are in a job. But the same table is below given where retirement is not the category. Here you get an idea that how your asset is allocated so that you can basically see if asset allocation is correct or not correct. Another important thing is real estate. Here the primary house is not considered as available to you for your goals or financial freedom because it is assumed that you will stay there. Okay, you would like to live there forever. So that's why it's not considered. But if you see this table, it has everything including your primary house. So this is your net assets. So in case of Rahul, his net assets is around 2 crores, while what is available for goals and retirement is around 1.36 crore. Okay. So if you, like you see, if you have finished this, first of all, congratulations. This is the most important first step, which most people who come to me haven't done it. They have vague ideas in their mind, but most of the time they are wrong. And I can tell you, they are usually wrong about their assets. They are usually wrong about their outflows and therefore their cash flow. Uh, and they have not understood this very clearly. So it takes quite some time for anyone to fill up and get to this level. I would urge you to take your time, understand, and even if it takes 1 week, just go, take time and fill it up. Once you have done this, you have the complete picture of what you have and what can be utilized to achieve your goals. This becomes foundation for all your financial planning. Okay. On the closing note, I would like to say a few things. First of all, keep it very, very, very confidential. Share it only with those trusted loved ones. If you are not sharing with them, then they are in dark. If something happens to you, they will not be able to locate this data, and they'll not be able to get whatever is available to you. You might know that lots of money is there with RBI, and they are trying to give it back to the people whom they belong to, right? So this is a kind of exercise which is very helpful for you and your family to locate all the assets you have. Okay. So at this stage, I want to say congratulations. Thank you for taking time and complete this exercise. You are ready for the next step. So we'll go to the next step of financial goal planning, and I'll explain how it can be done. Thank you.